On September 3, 1929, the Dow Jones Industrial Average hit a record high of 381 points. The smart money said we had reached a permanently high plateau. 3 years later, that same index sat at 41 points. It was an 89% destruction of wealth. If you had $100,000 invested in the safe, blue-chip stocks of the day, you were left with $11,000. We are taught that market crashes are universal events, that when the market tanks, everyone loses. But that is a lie. In 1929, while millions of Americans were losing their homes, a small minority of investors actually increased their purchasing power. Men like Bernard Baruch, or the banking families of Europe, did not suffer during the Great Depression. They thrived. Why? Did they have a crystal ball? Did they get lucky? No. They survived because they understood the difference between paper wealth and real wealth. They knew that in a crisis, liquidity dries up. The exits become small, and the assets that made you rich in the boom, stocks, corporate bonds, speculative real estate, become worthless liabilities in the bust. They didn't sell and go to cash. They moved their money into the Immutable Three. History shows there are 3 specific assets that have acted as a lifeboat in every major financial collapse of the last century. They are not exciting. They are not going to the moon. But when the music stops, they are the only chairs left. These are the 3 assets you need to survive the 2025 cycle. To understand the first asset, we have to look at the 1970s. This was a decade of stagflation, high inflation, high unemployment, and zero growth. It is the exact economic scenario the United States is facing right now. If you held the S&P 500 during the 1970s, you made zero money for 10 years. In fact, adjusted for inflation, you lost 40% of your purchasing power. The stock market was a wealth incinerator. But there was one asset that didn't just survive. It exploded. In 1971, gold was $35 an ounce. By January 1980, it hit $850 an ounce. That is a 2,300% return during one of the worst economic decades in American history. Why does gold work when everything else fails? It comes down to a single financial concept: counterparty risk. Almost every asset you own is someone else's liability. Your bond is a loan to the government. If they default, you lose. Your stock is a share in a company. If they go bankrupt, you lose. Your bank deposit is an IOU from the bank. If the bank fails, you lose. Gold is different. Gold is the only financial asset that is not someone else's promise. It is an element. It is finite. It requires no board of directors, no CEO, and no government to maintain its value. When faith in the system breaks, when people stop trusting the government to pay its debts or the banks to return their money, capital flees to safety. We saw this in 1970s America. We saw this in the 1920s Germany. We are seeing it right now with central banks. In 2024, central banks bought more gold than at any time in history. China, Russia, India, they are dumping US dollars and buying the metal. They know the reset is coming. They are building their lifeboat. If the smart money is allocating to gold, why is your portfolio 100% in paper stocks? The second asset is the most controversial. You have been told cash is trash. You have been told that inflation eats cash alive. And over the long term, that is true. But in a crisis, specifically a deflationary crash like 1929 or 2008, cash is not trash. Cash is a weapon. Specifically, short-term U.S. Treasury bills. To understand why, we need to look at the anatomy of a crash. In 2008, almost every asset class fell together. Real estate dropped 40%. Stocks dropped 50%. Liquidity vanished. Banks stopped lending. But if you held cash equivalents, your purchasing power skyrocketed. Why? Because asset prices collapsed. If a house costs $500,000 today
and it drops to $250,000 in a crash. The person holding cash just doubled their wealth without doing anything. This is called optionality. The ultra-rich do not stay fully invested 100% of the time. They keep a massive war chest of liquidity, short-term T-bills, ready to deploy when blood is in the streets. Right now, you can get paid 5% risk-free by holding short-term government debt. This is the yield shield. You are getting paid to wait, while the stock market is trading at historic valuations, priced for perfection. T-bills offer you safety, but there is a catch. You must keep the duration short. Do not buy 30-year bonds. In an inflationary crisis, long-term bonds get destroyed
because locked-in rates become worthless. You want 3-month or 6-month T-bills. They are cash equivalents. If the market crashes tomorrow, you can sell your T-bill instantly and buy high-quality stocks at a 50% discount. It is a win-win scenario that the retail investor ignores because it isn't sexy. The first two assets protect your money. The third asset protects your life. When the currency collapses completely, when the financial system resets, the only things that have value are the things humans need to exist. Asset number 3 is productive land and energy. In the Weimar Hyperinflation of 1923, billion-mark notes were sweeping through the streets like trash. But the farmers? They were the kings. Because no matter what the currency is worth, people need to eat. We see this pattern in every major wealth preservation cycle. Bill Gates is the largest owner of farmland in America. Warren Buffett has been buying energy companies and oil pipelines for years. BlackRock is buying single-family neighborhoods. They are moving from financial assets, digits on a screen, to real assets, dirt, oil, food. You might say, I can't afford a farm. But in 2025, you don't need to buy a 100-acre ranch to get exposure. You can buy commodity producers. You can buy energy ETFs. You can buy farmland REITs. The logic is simple. The Federal Reserve can print trillions of dollars. They cannot print a single barrel of oil. They cannot print a single acre of topsoil. Farmland values have a 99% correlation with inflation. If the dollar loses 50% of its value, the price of the corn grown on that land doubles. Productive land is the ultimate inflation hedge because it creates the commodities that cause the inflation. It is the foundation of the pyramid. If the banking system fails, the land remains. The year 2025 is shaping up to be a pivot point in history. The debt load is unsustainable. The geopolitical tension is at a breaking point. Most people are sleepwalking into this trap. They are holding the same 60-40 portfolio of stocks and bonds that worked in the last cycle, thinking it will work in this one. They are the ones who will sell at the bottom. But a crisis is not just a destroyer of wealth. It is a transfer of wealth. Wealth is never destroyed. It simply moves from the unprepared to the prepared, from the impatient to the patient, from those who hold paper to those who hold real assets. The Immutable Three. Gold for insurance against the currency. Short-term bills for liquidity to buy the crash. Productive land for fundamental survival. The storm is coming. You can ignore it, or you can build your ark. The choice is yours.